Hi everyone and welcome to today's More Report on Wednesday the 26th of August with me, Richard Perry, market analyst at Handset Markets. This market volatility is remaining and there was a big sell-off into the close on Wall Street last night. S&P 500 fell about 3% in the final hour of trading to close lower on the day, down 1.4%, and that sort of just reflects the volatility that is still in this market. We did have a rebound in sentiment yesterday, but it sort of retraced that move today. Markets are sharply lower in the European session, and the volatility was sort of present throughout the Asian trading. And what we have got is just this general theme of volatility, really. Here we go on the VIX index. This is VIX index of S&P 500 options, and it reflects volatility and basically the demand for short covering, short protection for fund managers' portfolios effectively. So that has been very volatile. Lower than it was obviously on Monday, but still sort of closing towards the high of the day on that VIX. We've seen that dollar sharply volatile again, still trying to unwind and sort of settle down in the last couple of days. The big movers have obviously been the commodity prices. That has been sort of the main driver behind this sort of selling pressure that we've seen through the market and the fears that the market has. Now this is WTI. Now the last couple of days we've seen a relatively settled move, but obviously we're still in this big downtrend. There's still a lot to be done to suggest that the oil price is bottoming, and I certainly don't necessarily think it has yet, but the last couple of days have been relatively settled, so the oil price is just showing very initial, I'd say initial, because it's obviously very tenuous at the moment, signs of possible support. But again, a similar story on the copper chart. Here we go, chart of copper in the last few months, sharply lower, again testing that downtrend. So we'll see how these two play out, but I think until we get a bottom in these commodity prices, I don't necessarily think that the volatility is going to really end anytime soon. The initial chart I showed you just now was that of Treasury yields. This is the 10-year in the US, and that is again big rebound back to sort of 2.1%, but still again today a little bit of volatility and still in that big downtrend. I think what the market is going to be doing is looking towards Jackson Hole at the end of the week for any signs from Fed members that they're going to be putting off this September rate hike. And if that does happen, then perhaps there could be an element of support coming into the market, because obviously fears in the emerging markets especially that the Fed is going to hike rates has been a big driver of the selling pressure. Wow, so lots still going on, lots still sort of trying to settle these markets, and forex majors are relatively sort of still buzzing around a lot, and certainly the yen is actually just under a little bit of corrective pressure today, because it seems as though about 50 ticks on the yen in terms of weakness, so dollar yen higher. So that is just slightly unwinding that safe haven move that we saw on the yen the other day. But for my money, I think the markets will be looking at the just the big picture macro story rather than the individual economic data at the moment. And we have got durable goods today. Durable goods in the US is due to come out at 1:30. Actually, it's expected to have a fourth month-on-month month-on-month increase of 0.3, maybe 0.4, depending on which where you get your estimates from. But interestingly enough, that would actually take the durable goods positive on the year-on-year basis for the first time in 6 months. So signs of a slight improvement in those durable goods data. So that would be a positive for the US economy. So that takes me to my chart of the day, actually, which is the Aussie dollar. Aussie dollar has been sharply under selling pressure on Monday, and it's still relatively trying to come to terms with that. But obviously that rebound that we saw yesterday again sold off into the close, hit that resistance around there. I mean, there's a resistance now at 72.30 towards 72.50 area. 72.50 was pretty much bang on the resistance that we saw yesterday, and that is, I think, a big barrier overhead now. Look at that resistance from those old lows, which is now sort of the new the old support of that range back from late July, early August becomes the new resistance, and that certainly played to that rally that we saw yesterday. The momentum indicators are very negative again. Stochastics falling sharply. MACD lines crossed over negatively. RSI actually back below 30 again, so maybe that could restrict immediate downside potential, but it certainly would suggest, I think, that selling into strength or any rallies seems to be the way to play this. Now this is the oh, that's not the Aussie, is it? Let me just show you. This is the hourly chart on the Aussie. That's that old range support that has become resistance. Look how many times in the last few days that has become resistance. On the 24th and 25th of August, resistance band. So that is the initial level of resistance coming in, around that sort of 72 figure towards 72.50, sort of 50 pips band of resistance. But certainly the sequence of lower highs is still in place. You could argue that the sequence of lower highs is in lower lows is in place as well, but you've obviously got this spike low that we saw on Monday, which is the sort of the initial sort of support. You would argue. I suppose beyond that 70.94 low that we've seen overnight. But I would say that 70.50 level is unlikely to be the low, because the outlook on this chart remains very negative. Look at this. These are the RSI on the hourly. Last few weeks, RSI on the hourly, every time it gets towards that sort of 60 point, it gets sold off back towards 30. That is pretty much an excellent sort of definition of a bear phase. And look at the MACD lines, same sort of indicator, really coming back towards neutral and then falling away again every time. So these momentum indicators still remain very bearish. So selling into strength has to be the way you play the Aussie at the moment, and there's no real suggestion that it's not going to retest that 70.50 low in due course. So I wish you good luck in your trading today, and I'll speak to you later. Thank you.